My dear children, in the second module, we are going to study the important features of depreciation and the various similar terms used in connection with depreciation. First, we are going to study the important features of depreciation. As we know, depreciation means the decline in the value of asset. Depreciation is an expense or loss for the company. The important features of depreciation are, first point is, depreciation is the decline in the value of asset. Asset means fixed assets. Then second point is, it includes the loss of value due to time or usage or obsolescence. For example, a business firm buys a machine of rupees 1 lakh on 1st April 2017. In the year 2017, a new version of the machine arrives in the market. As a result, the machine brought by the business firm becomes outdated. The resultant decline in the value of the old machine is caused by the obsolescence. Then third point is, it is a continuous process. Depreciation is a continuous process. The next point is, it is an expired cost. Hence, it must be deducted before calculating the taxable profit. Now, I am going to give one example. The profit of the firm is rupees 50,000 and the depreciation is 10,000. The profit before tax will be 50,000 minus 10,000, that is 40,000. The next last point is, it is a non-cash expense. Depreciation is a non-cash expense and it does not involve any cash flow of the business. Then it is the process of writing off the capital expenditure already incurred. My dear children, now we are going to study the various terms used in connection with depreciation. As we know, depreciation is the decline in the value of fixed assets. The various terms in connection with depreciation are amortization and depletion. Amortization refers to writing off the cost of intangible assets like patents, copyrights, trademarks, franchises, goodwill, which have utility for a specified period of time. The various examples of intangible assets are goodwill, patent, copyrights, trademarks, mining rights, etc. The procedure for amortization or periodic write-off of a portion of the cost of intangible assets is the same as that for the depreciation of fixed assets. Now we are going to discuss one example. If a business firm buys a patent for rupees 10,000 and estimates that its useful life will be 10 years, then the business firm must write off rupees 10,000 over 10 years. The amount so written off is technically referred to as amortization. The word amortization is used to show the loss in the value of the intangible assets. The intangible assets are goodwill, patent and copyrights, etc. These assets are written off over a certain period. Next term used in connection with depreciation is fluctuation. Increase and decrease in the market value of the asset is known as fluctuation. As we record the value of these assets on historical basis, we do not pass any entry for the fluctuation in the market value of the asset. In the case of permanent fall in the value of investment, fluctuation may be recorded. The another important term used in connection with depreciation is depletion. Depletion means it is the extraction of natural resources like mines, quarries, etc. It reduces the availability of the quantity of the materials or assets. Then the firm may possess certain mineral wealth such as oil, coal, then iron ore, etc. The more we extract mineral wealth from the mines, the more mines are depleted. Decrease in the mineral wealth of the mines is termed as depletion. The another term used in connection with depreciation is obsolescence. Sometimes new inventions throw away the existing machines and equipments as obsolete. Although the old machines and equipments are not completely useless. The firm will have to replace the old machines and equipment with the latest machines, up-to-date and newly invented machines and equipment. Loss due to the obsolescence of the old machine and equipment is known as